So this video will focus on one of the most common patterns seen in successful stocks, and that's called the cup and handle pattern. And it's called the cup and handle pattern because if you look at a cup from the side, it's kind of rounded, and then it has a little handle on the right. When you study successful stocks in the past, you start to see that a cup and handle is an extremely prevalent formation if it develops properly, and that's really the key. Not all things that look like a cup and handle are really true cup and handles. They have to have the right parameters in order to be a successful cup and handle pattern. Let's take a look at CMG, Chipotle Mexican Grill. And it had a cup with handle. In fact, if you look at it, it had a big sell-off on fairly light volume. And then that cup went all the way down to the bottom, had a slight correction. And normally you're going to want to see a rounded cup at the bottom, but sometimes they're a little bit jagged. It didn't bounce too much, so it formed a nice rounded formation all the way up. Now notice how it didn't have a handle on that first formation there, but the next one did. And so that declined for about 5 weeks, and then it ascended for about 4 or 5 more weeks, and then it had a long handle. You can see that long handle was in fairly low volume, and that is a key. Low volume in a handle means that the institutional sellers are not there. It's more like you and me and your Aunt Edna that are all selling out their small positions, and the institutions are hanging tight and hoping to buy those positions from them. Once that selling is out and those weak holders have been shaken out of that stock, it starts to recover, and that is when you start to get your buy position and your buy orders ready, because that is the highest likelihood of a breakout. Now you'll notice in Chipotle it had 1, 2, 3, 4 cup and handle patterns in a row there over several months. So what does that tell us? Well, it tells us a lot of things. Number one, it tells us that as these cup and handles and these cup formations continue to form over and over again, the weak sellers are getting driven out and the institutions are supporting the stock. Notice how it stays around its 50-day moving average most of the time, and it certainly doesn't fall below its 200-day moving average. In fact, it starts to develop a big, long consolidation over many, many months at a low of 46.46 and a high of 99.71. And when you get all of that buying, if you had bought in the beginning anyway, you would have doubled your money. But if you get all that buying in a certain area, it's like coiling a spring. And once that spring is coiled enough, then the stock wants to spring higher. And you can see that in the rest of the chart of Chipotle Mexican Grill. From the very first cup and handle breakout at $68, the stock really never looked back. It just chugged along, and went up. And if you had just bought it at every one of these buy points at the exit of a cup and handle or a pattern formation, even if you bought it at 98, eventually that stock went to $442 as the high. So the strength of using cup and handles to recognize significant buy points in a stock is that as an investor, you can start to pinpoint predictable spots on the chart where there's a higher likelihood that if you buy it there, you are buying it at the right spot and you won't lose money.